Hi, this is Elliot Eisenberg here to catch you up to date on the latest in residential sales data for July 2024 for Hillsborough County. In Hillsborough County, single-fam home prices were unchanged year over year. On the multifam side, they declined 3.3%. When it comes to sales activity, first, on the single-fam side, sales activity rose a pleasant 5.4%. On the multifam side, they declined a skosh 2.2%. Pending sales activity fell just 1.9% on the single-fam side. That was the smallest decline across all three counties in both types of properties. Pending sales activity declined a more substantial 10.5% on the multifam side. Inventory increased across the board in all counties and all types of properties. The months of inventory now are 3.4% on the single-fam side. That's an annual year-over-year rise of almost 80%. On the multifam side, they now stand at 4.5 months. That's an increase of almost 115%. Because of the rise in inventories has been so large and so relatively quick, it's still a seller's market, but less so than it was before. And we see that in the sales price to list price ratio, which has fallen from 98.8% for single fam to 97.5% now from a year ago. Whereas on the multifam side, it's fallen from 98.3% to 96.3%. In Pasco County, the median sale price increased 3.9%. That was the largest increase across all three counties in both types of properties. Multifam prices increased a slight 0.8%. Sales activity was up for both single and multi by a strong 6.4% on the single fam side. That was the best single fam performance across all three counties, and up a staggering 21% on the multifam side. Clearly there's some new sales activity going on. In terms of pending sales activity, it declined for both types of properties, down 7.8% for single family units and 7.2% for multifamily units. Inventory increased here like it has everywhere else. It's up 100% for single fam units to now 3.4 months of inventory, and it's up to 3.6 months of inventory after an 80% increase on the multifam side. Because inventories are going up relatively quickly and by a relatively large amount, while it still remains a seller's market, it's less so than it was. As a result, sales price as a percentage of original listing price has fallen for both single and multifamily. For single family, it fell from where it was a year ago at 98.7 to 96.6. On the multifam side, it's fallen from where it was a year ago at 98.7 to 96.7. In Pinellas County, single-fam home prices fell 1.1% year over year, but increased a strong 3.4% year over year on the multifam side. That's the strongest multifam performance across all three counties. Sales activity fell slight 1.5% on the single-fam side and went up a little bit better, 2.9% on the multifam side. Pending sales activity slipped 6.4% for single-fam properties and slipped almost twice as much, 12.2% for multifam units. Inventory here in Pinellas increased like it did everywhere else and by a large amount. It went up almost 125%, and there now is a 3.8 month supply of inventory for single fam units. On the multifam side, it increased almost 105%, and there's now a 6.1 month supply of inventory. Because inventory has gone up quite a lot and quite quickly, the sales price as a function of list price has obviously declined. On the single fam side, it's fallen from 98.5 a year ago to 95.6. On the multifam side, it fell from an already low 94.9 to now an even lower 92.3. And on the multifam side here in Pinellas, it's slowly becoming a very balanced market. Turning our attention to the national economy, in Q2, GDP was 2.8%, very robust. However, in Q1, it was 1.4%, and it's looking like it's slumping in Q3 and will be hard-pressed to reach 2%. That said, importantly, inflation continues to fall, but unfortunately, unemployment is steadily rising. Unemployment troughed out in March or April of last year at 3.4%. It's now 4.3%. That's a very large increase, something I'm watching closely and something I'm nervous about. In terms of inflation, after an early scare in Q1 of this year, it's continued to fall very nicely. And as a result of that, I expect there to be cuts at every Fed meeting the rest of the year. There'll be one in September, one in November, and one in December. How big the cuts will be is the question, not whether they'll have them. So let's assume a baseline of a 1/4 point cut in September and November and December. And depending on how much inflation falls and how much unemployment rises, it's distinctly possible that one of those cuts will be a 1/2 point cut and not a 1/4 point cut. And as a result, between now and the end of the year, we may well get 1 full percentage point of interest rate cuts as opposed to 3/4 of a point. In anticipation of these cuts, we've already begun to see interest rates decline. The 10-year Treasury has fallen by 9/10 of a point in the last 4 months. Similarly, the 30-year mortgage has fallen by 0.8 of a point. So there's already been quite a lot of movement in this area in anticipation of these cuts coming down the road. My fear continues to be the fear of a possible recession. The Fed has kept rates too high for too long, and I'm afraid of that. A mild recession is likely. That said, the American economy remains resilient. Let's hope it stays a little more resilient for a little bit longer before interest rate cuts begin to do their magic.